Hi, Teresa Tims, president of TDR Mortgage, serving the entire California market and then some. You've been probably putting off buying a house, waiting for the right time, or maybe even have been trying to time the market. In the meantime, you're renting. You're in a situation where you can purchase right now, and you say to yourself, is now a good time to buy? I think as long as I've been doing home loans, that is the age-old question. Is now the time that I should buy? I'm going to share with you a really cool analysis tool that I have, buy rent comparison, that shows some pretty important information about why buying is so beneficial, why it is the #1 wealth building tool for you and your family. But first, I want to share a little story with you. I've been originating home loans since 1998 and been involved in a lot of transactions. And one particularly stood out to me about a woman that thought that she would never be able to purchase a home. At the time, she recently retired, 65 years old, living in a trailer beside her daughter's home. And I wouldn't even consider it a trailer, more like a rigid tent. There's no running water, no electricity. She had to go inside to bathe, to cook, things like that. It was basically her own private space to sleep. Now, this woman, 65 years old, worked her whole life. When she came to me, she was largely depressed, thinking, is this all the better it's ever going to be for me? Is this what I worked my whole life for? Well, what I was able to do for her was show her some of the benefits of home ownership, the areas that she could in fact afford. Now, she did have a small down payment, and it was even able to get her some down payment assistance through a county program. At the time that I helped this woman, that was available, and you can do it. Now there are a lot of restrictive income limits, but we are always looking for how can we get you into a house and make your purchase the most advantageous that we can. Now, when I was able to finally do a loan for this lady, now it wasn't easy, so I'm not going to pretend that, oh yeah, it was super easy, but we did it. We got her a loan, got her a house, a 4-bedroom, 3-bath, 3-car garage, tile roof in Adelanto, California. She could not have been happier. Her dream of home ownership had come true. Now, that lady wasn't just any lady. That lady was my mom. And knowing that I had this impact on her life, it's probably one of my biggest home ownership achievements. And I want to be able to impart that upon everyone that I come in contact, especially my first-time buyers. I know it's scary, and I know you're out there right now with all of this stuff, all of this stuff in your ear about why the market is crashing, or now it's not a good time, you should wait. But I'm going to share with you the cost of waiting. And that cost of waiting is a direct result of your inability to create wealth without home ownership. Home ownership is the #1 way. And it's also a big leverage against rents. And you and I both know being out there as a renter is not fun right now. So let me share with you, let's compare and contrast a $650 sales price in Los Angeles, California. So this is a buy versus rent comparison. Let's move this up here. California, any 650 home in Los Angeles, and that's not going to be an easy task, but it is doable, right? Monthly rent, let's say you were to go out and rent a 1 or 2 bedroom house. And the reason I say that is because 650, if you're buying a 650 house, it's not going to be that huge. So here we have a 650 house, you're renting it, and a $2,800 rent is probably going to be pretty darn good. Realistically, it's probably closer to 32 or 33. Certain areas of Orange County or beach communities, it could be $35,000 or $4,000. But you could also not buy a 650 home in those areas either. So, there are certain opportunities for this 650 price. Okay, let's go down. Annual rent increase. This is the average rent increase in Los Angeles. So maybe you do have a low rent in Los Angeles, and maybe that rent has actually been holding you back because maybe you want to move somewhere else. You want to move to something bigger, but you can't. You're kind of stuck because you don't want to lose that low rent payment. And it's not, everybody does things for what they need to do at the time. So I just want to give you this information so you can take a look at it and say, wow, I didn't think of that, or wow, I didn't think of that. Thank you, Teresa. You're welcome. Anyway, okay, property. My property, 650. The taxes in California are largely based at 1.25%, super standard. Some areas are a little bit lower, older areas. Newer areas, new construction, where they have to pay for a lot of infrastructure, this rental tax rate could be as much as 2%, but we're just going to use 1.25% for this comparison. Property tax does go up slightly every year, and sometimes it doesn't. Sometimes it goes up 0, but for the purpose of this, I put in 1. Repairs and maintenance, I put $200 a month. If you own a home, there's always something going wrong with it. You've always got some kind of repairs, maintenance, gardener. Cost to sell. Let's take a look at, in the future, if you go to sell, what is that going to look like? I'm doing an FHA loan here. Let me just pop in FHA. And I'll tell you more about that in a little bit. FHA loan, $585 loan amount. Well, this says conventional. Let me just make sure we got it right. FHA, okay, we're in there. 5.25 monthly mortgage insurance, upfront MI, closing costs $13,000, include twofold. Closing costs are third-party legal fees that only happen one time, and then you have your taxes and insurance. That money doesn't go to me. I don't get your closing cost. Average homeownership is 9 years. People usually keep a house, 8 to 12 years before they sell it. It used to be a lot less, but people are staying in their homes longer. California, Los Angeles, historical appreciation. Let's just say it, historical appreciation. We're not going to go into the past couple of years where we had, 20, 25, 30% appreciation over the last couple of years, because that was unique, so to speak. Okay, historical tax rate, single filing status. Okay. So you could see we covered a lot of data points there. Now let's go take a look at the results. Let's take a look at the results. Come up here. Okay. So you're all, Teresa, what does this mean? Cash flow difference. So with the payment being $45.97 and your rent being $28.26, you can see that in the beginning, you're actually your outlay is less if you remain a renter. Now, how realistic are the rents going to stay that way? How realistic is it that you're going to be able to just maintain the rents at this level, and then year 8 or 9 is where it evens out? So you look in the very beginning, cash flow wise, it's not the best cash flow game. But now let's look at this. Okay. One thing you don't realize is that when you do own a house, so here you own a house, this amount that you're paying, right? This $499, you would have paid $499 in payments, and in rent you would have paid $418 in payments. That's this $80,000 figure right here. Now, being an owner, you would have actually paid $92,000 into that loan. So your remaining principal balance would be $592. So you're actually paying into something, and the longer you have your loan, the higher amounts that you're actually paying into the principal. But let's look at the money piece here. Let's look at the appreciation gain. I mean, $500,000 of appreciation. And that is in a very conservative market. Even if properties were flat or even lost a little bit of value the next year or two, over the long term is where you see the benefits of home ownership. Now, a single person is going to have $47,000 of tax benefit. When I'm helping people buy houses, we're looking at, if the payment's going to be a little bit more, we're looking at the tax benefit too, because you have write-offs and you have an interest deduction. So if you're making a lot of money and don't have any write-off, that's why you hear like tax people say, you definitely need a write-off. Okay, so here, if you were to sell this house in that 9 years, taking in the 6%, your future value would be 1.1 million in 9 years. So this whole thing is a lot of information, but it shows you how beneficial the long-term side is of real estate. Okay. Net gain by buying a home. So here's just some more details. And you look at the first year or two, not the greatest, but what I can tell you, what I can tell you is the greatest. This is what's the greatest. Being able to do whatever you want to your house without having to ask permission. Being able to spend money to improve your house, to make it nicer without having to throw that money away. Being able to paint the walls black, yellow, purple if you want to. That is what is the greatest. Get off my little rant there. Okay, so this, you can see that this is something where, hey, yeah, maybe I am hearing all of this stuff, but we really need a place to live. My kids need to be in a certain school district. We've got a dog. God forbid you go out and rent a house right now. If you have a dog, good luck with that. I want to show you something here too. So just last week, we were pricing out FHA loans at 4.375. And the payment is $43.82 on 650. Now, if right now today it's 5.375, so we had quite a bit of a rate hike this last week, 47.70. Now, this same house, let's say you're going to wait a few months because you think, oh, it's going to go down a little bit. Let's just do that. Let's put it in at let's put it at 600,000. Let's put the rate at 7% because that's where we're headed. And we're there on some of the loan product. Look at the payment. It's $5,000. So you have to be careful playing that game of what if. What if the prices do go down? What if it's not the right time to buy? You have to get your mindset in an area where you're not a fix and flipper. You're not going to go buy this house because you're looking to sell it in a year. You're looking for a home to live in, possibly to raise a family, maybe not. Maybe you're a dog or cat person, and that's why you want your house, because you want to grow your dog and cat family. There's so many reasons, and I hope I was able to illustrate some of the benefits of home ownership and possibly even took away, some of the fear of whether or not you're making the right choice. Earlier in the video, I shared with you something that we were going to revisit later, and now that's the time. So I chose FHA as the loan to feature in that rent versus buy cost estimator. And the reason is FHA loans have have a feature called a streamline refinance. A streamline refinance for FHA loans is very, very generous in that it's very streamlined. So let's say you have this much docs when you buy your house or this much stuff to do. In a streamline, you have like this much stuff to do. As such, everyone's fees, title, escrow, lender, everybody does things super low cost, and it's done very quickly with very little documentation and no appraisal. So that's a super cool thing, right? Because what if the values do go down? Well, you need equity to refinance into a conventional loan. And let's take a look. We just priced out a loan too with a borrower that has a really high FICO. Earlier, I was using 5.3, but we're going to go to this scenario, 5.5. Okay, let's go there. All right, 5.5, 650, 3.5% down. We have our mortgage insurance here. You have upfront mortgage insurance on FHA loans, and you have monthly mortgage insurance on FHA loans. You have monthly mortgage insurance on conventional loans also. So here we have 5.5, 650, payment is 48.20. Now, what if when we go into a recession, what typically happens is the government says, wow, we are having some issues, right? What do? They lean to housing. Housing is such a big stimulus to the economy. And so traditionally, I mean, nobody has a crystal ball, but traditionally, historically, what they do is to try to help out the economy by lowering rates and stimulating housing. So if history is an indicator, that will happen. I like to bank on things that are known. I'm not a gambler. So if I couldn't afford the payment as it sits right now, if I couldn't afford that right now, I wouldn't buy a home based on the fact that when a recession comes, they're going to lower the rates. But this is just an added benefit to the FHA program. And if we are able to lower the rate, let's just say to 4.5, when you look at the payment from the 48, it goes to 44. So that's a $400 savings, which is really, really cool. And should we get lucky and it go lower, great. If not, and I also just priced out a conventional loan. Here's what conventional looks like. So let's look at the two. When I'm comparing and contrasting loan products for my low down borrowers, if the payment is pretty similar or lower on an FHA loan, even though you have that mortgage insurance, I'm recommending the FHA loan for the Streamline Refinance Benefit. Okay, so let's just kind of take a peek with me and I'll show you how this works. I go like that. Okay, so we're going to go here. Now making this is a conventional loan, so we're going to get rid of the upfront mortgage insurance. And then we're going to lower this monthly insurance just a little bit. So conventional loans, unless you put 20% down, have monthly mortgage insurance. FHA loans, you can't get rid of that mortgage insurance. Okay, 6.4, blah, blah, blah. We have the MI adjusted, 49.57. And the FHA was 48.20. So let me do 4820. I'll put on my glasses. Hold on. 4820 minus the 4957. 137. So the FHA loan is going to be $137 a month cheaper in this scenario. So I would definitely recommend to my clients, and we have I have compare and contrast things that I can share with you for you to look at. You know, what loan is paying the most principal, what loan has the best long-term benefits. But because we are going to be going into recession in the future, and because FHA has that streamlined benefit, I'm recommending that. So anyway, you know, my first house wasn't in the best location. It may have even been near the ghetto, but it was safe enough, and it was just me, and I didn't have schools to look out for or anything like that. But just do it. You know, if you're in a situation where you're living paycheck to paycheck and you're having a hard time making ends meet, and getting a house means you'd be spending all your money, and you're fearful because of that, then don't. Save your money, build your credit. But if what's holding you back is just the chatter of what's going on and everybody telling you, or all the media talking about how the market is going to crash, look at the information. Real estate is not a short-term gain unless you're some kind of, fix and flip real estate investor. So anyway, like, subscribe below, comment. I would love for you to share with me your feelings on what's holding you back. Do you have any questions? What can I do to help you? Even if you're not in California, I know a lot of people in a lot of areas, and let's connect. So anyway, have a beautiful day, and thanks for stopping by. Call or text to 909-920-3500. Bye.